Hey everybody, this is John and welcome to the free video. So for today, what I'd like to do is kind of dive in, and this is a question I'm getting a lot right now, so here, this is the S&Ps. So S&Ps here consolidated into the end of the year and have since gone up straight up nearly 100 points for the last 1, 2, 3, 4, 5, 6 trading days. And so the question is like, okay, well, if you were flat right here and you hadn't done anything, what do you do? Do you bet it all long here? Okay. So 1, do you go long? I don't know what number that is. It's supposed to be a 1. 2, do you go short? Okay, the S&Ps. Or 3, do you just do something else that's high probability? Well, guess what? Buying right here is kind of low probability because it can only get so extended from the moving average before it has to kind of pop back and test it, right? And so we're kind of in that zone. Going short a very strongly trending market also doesn't make sense because you're just fighting the tide and it's just harder. It's a harder way to make a living as a trader. Not so bad if you're doing it, intraday on a 5-minute chart or something like that. But when you're swing trading, you want to be trading in the direction of the trend. And then 3, what about stuff that is just, not part of this world, which I think can get more interesting. And so I put together a list of things, and so something like this. The 2 that stood out, although there's a couple ones I'm looking at, is for 1, is keep in mind that there are some stocks out there that are going down. Okay, so REGN. Now, some some biotech stocks right now are going nicely higher, and other ones are having more fundamental problems. But what I like about this is that there is a squeeze setting up right here, and I also like that, hey, in this market, I think it's a good idea to have some short exposure, all right? And so that's something where I'd look at, like, either selling a call credit spread, buying some puts, and different things like that. And then from there, what I liked is that if you look at XLP, okay, XLP is in a squeeze. This is a sector, all right, and it's a good looking sector there. And you can see here we've just been consolidating. For those of you that aren't aware, XLP is the consumer staples. Okay, now when we look at Monster Beverage, you might not think of that as a staple unless you're highly need a lot of caffeine and sugar in your diet. Then it could be a staple. But as a beverage, it's considered a staple. So here we've had this nice move sideways, and we got a nice breakout today on some good volume. Now the squeeze hasn't fired yet. So in a perfect world, tomorrow morning early we get some selling, and we get a chance to get some bullish positions on Monster. Okay, so I like that. So those are 2 setups there. REGN to the downside and Monster to the upside that are both really independent of what's happened in the S&P 500, really independent of what's happened in the Qs. They're kind of doing their own thing, and those are the kind of setups that I like in this market. All right, so one thing that I also am keeping an eye out are what I would just call for clusters of squeezes. All right, so what are clusters of squeezes? It's when you literally have a cluster of squeezes together like this, the weekly, the 4-day, the 3-day. All right, that means you got a lot of power setting up. This happens to be the 30-year bonds. And you can see that the way this is setting up for a down move. All right, you could also do this via TLT. All right, that means kind of buying puts in something like TLT, and you can see here that you've also got 2-day squeezes. Now, you'll notice another tool over here. So there's 2 tools I'm using here. So one is these multi squeezes. They're very powerful. And then the other one is you come over here and look at these top hats. The top hats just tell you, like, hey, this has gotten a little extended and we need to come back to the mean. Okay, so it's gotten a little extended here, so it may need to kind of come back up here a little bit. But there's a couple things to ask yourself here. First of all, if you like it and you want to do a longer term play on this, which if there's a weekly, 4-day, and a 3-day, and a 2-day squeeze, you're looking at March, April, May puts on this. It's okay just to buy the puts and hold through the next pullback, or buy half your position here and add. Okay, you don't have to get the perfect entry on something like that. But the main thing is to look for that cluster of squeezes. And then the other thing to keep in mind, especially on this chart on the left here, the daily chart. This hourly chart here is more for kind of day trades and swing trades. You get this, boom, you get this, boom, you get this, boom, boom. It's been great for oil. So on a daily chart, when you see these, you're looking for a pullback to the 21. Pullback to the 21. So right now, although oil has been amazing and we've got a squeeze here, and by the way, the squeeze always takes precedence here. So when you get a top hat without a squeeze, boom. Here we do have a squeeze. So look for, this is just where you tighten stops. But somebody was asking me about, should I buy EOG today? And the answer is no. At this point, if you don't have it, you missed it. Just wait for the next pullback, though. All right. And another one here that's setting up is Activision. So you get a cluster, 4-day, 3-day, and a weekly squeeze. And then what you do is that you can sit there and, on a smaller time frame, say, here, let's move over here. I'm going to drop this to like a 1 minute. I don't look at 1 minute very much, but if you look at a 1 minute chart, you'll see all the lower time frames setting up. And right here, we're not seeing any yet, but so what I do is when I see something like this, it's like, great. Now, let's see if we can get a cluster of squeezes around the 30, 20 minute, and the 15. And when that happens, that becomes a great entry because then that is kind of the fuse that lights the bomb, all right? And it can get you in for some very, very nice risk-reward ratio type of trades. So the whole idea of these tools is to get everyone on the same page this year on what I call the natural trading cycle. And of course I need to learn how to spell accumulation. But what'll happen with this natural trading cycle is you get the accumulation, markup, and then distribution, and then the markdown, okay, and it just goes over and over again. So you get strong and smart money down here, and then the dumb money is buying up here at the top and then getting stopped out. Now it doesn't mean that the people who buy down here are smart and that the people who buy up here are dumb. It just means that the guys that are, in this case buying down here know the game, and the people up here don't. Everything up here looks nice and safe, right? And it's obviously the same for downtrends. And this is, of course, what causes, most of the whipsaws that traders go through. It's like, I'm getting in, wow, and it's exciting, and then it's, oh my gosh, and then depression. But what I want you to notice here is that, the point of optimism here on the way up, okay, and then it comes, where it comes back to and comes back up is the same point. So just keep that in mind. That's, it all comes back to the same point. So the main point of this is that to really capture this whole phenomena, you want to be able to understand squeezes on multiple time frames. So here there's 18 time frames, and so you can see on Red Hat there's a squeeze on the monthly chart and the 4-hour chart and the 2-day chart, etc., etc. And when they're all happening at the same time, you get the biggest, most consistent moves away from the mean. Right? But that's a lot of squeezes to look at. So what this tool does, is it just takes all those same time frames and takes a quick snapshot of them and throws them at the top of your chart here. So you can see monthly, weekly, blah, 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 blah. So we got so here I can see on PRA, I had the 2-day, daily, 4-hour, 2-hour, and 60-minute squeeze setting up when it was at 81.50. And then when it triggered, you can see that by the time it ran out of gas, it was up here around 91.50. So a $10 move, a $10 move on Amazon, which is a $1,000 stock, okay, not a big deal. But a $10 move like that's like a 10% move. That's a huge, huge move. Now notice that when the stock started getting tired, you started seeing these little top hats here, okay? This is the cycle that I'm talking about. So this is telling you, hey, the accumulation phase is happening right now. The smart money is getting in. But when you see this, that's what I call stealth distribution, and they're starting to get out and dump their positions for the potential. All right, it doesn't mean we have to, but the potential now is very high that we revert back to the mean. That's that same level I talked about on that emotional chart, both on the upside and the downside. And that top hat, it works both ways too. If a stock is too far gone to the downside, you're going to start seeing the smart money accumulate that, in this case AutoZone, and then from there we take off. Here's another example. This is a StockEDU, which we really liked. Got this at the end of the year. Nice daily squeeze. But in addition to the daily squeeze, and this is different, TradeStation looks a little different, you can see that there was also a weekly squeeze, a 4-day squeeze, a 2-day squeeze, a daily squeeze, a 4-hour squeeze, a 2-hour squeeze, and a 39-minute squeeze. And I love it when I see something like that, because what happens is that these smaller time frames, like the 39 and the 120, that's like the fuse that lights the bomb of these bigger ones. So it gets in here and that triggers, right, and then which triggers that one, and it's just like pop, 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 pop. And so you can see what happened here is that stock went from $92 and that like the fuse was lit and we exploded up to 105 before we started getting what? The top hats, which tell us that the distribution is now happening. So these two indicators, which we released in December, have been our game changer. And we've gotten a ton of emails on this. And this is one that says, hey, I've been with you guys for a long time. I did a lot of selling of options in 2017 with limited buying, and I did quite well. I almost gave up entirely on buying options, not really feeling like I had an edge, even though I have many of the indicators, and I look at all this stuff. The haystack indicators, which are the two that I showed you, are, in my opinion, a game changer. The multiple squeeze indicator is amazing. Now I can look for solid clusters of multiple squeezes setting up and only take the best ones. This week alone, I've taken trades in Boeing, OLED, EDU, and PNC. The result is 3 times the cost of the class and a good start to 2018. So we've been seeing these kind of results across the board, which I love. That's great. So we are winding down our release of these indicators, and I'll show you a special real quick that you can still take advantage of. If you would like to buy these individually, here's the multi-squeeze indicator and here's the top hat indicator. The multi-squeeze is $4.97 and the top hat is also $4.97. However, you can get both of these plus the power correlations tool for $7.97. Okay, so that's a substantial savings, and this is almost, we have a class starting tomorrow at, that is not a time sign. We have a class starting tomorrow at 1 o'clock Central, which is going to go to 3 o'clock Central. And everyone who takes advantage of this special price, which I'll show you, can come to this live class, see me trade this stuff live, and see exactly how to use the indicators. Now you might be asking, what is the power correlations tool? So the power correlations tool is just a really phenomenal institutional level tool. Instead of having to pay, $100,000 for it, which is what institutions do, it's a nice thing that can say, all right, say you got top hats on the Qs, and you're like, wow, what happens if this thing really pulls back? Well, you plug in your portfolio, and here it's like, okay, I don't have any cash. I got 20% of my portfolio in Amazon, whether that's options or stock or whatever. 20% in Amazon, 20% in Facebook, 20% in Microsoft, and 20% in Netflix. Now it's going to tell you that, hey, you are correlated 0.8 to the Qs. Okay, what does that mean? Correlation goes from -1 to +1 and everything in between. So if you've got a 0.8 correlation, what that means is if the Qs fall, you're going to get killed. Your portfolio is going to move almost in lockstep with the Qs. So if you see that and say, you know what, I really don't want to take a bath, I want to preserve what we have, but I don't want to get completely out of the market, then you can say, all right, I'm going to adjust my portfolio. So what happens if I raise some cash, so 20% cash, this is based on a $10,000 account, and then I put 20% into SQQQ, which is a reverse ETF, 20% into JP Morgan, 20% into Disney, and then 20% into FXY. Now my correlation is -0.2 to the Qs. This means if the Qs keep going higher, I might lose a little bit of money, but if it falls, I'm going to make a little bit of money. Okay, so my volatility against the Qs has decreased quite a bit. You could also put in your portfolio and say, wow, the euro is setting up a huge squeeze. How is my portfolio correlated to the euro? All right, so anyway, it's a really cool tool for those of you that want to kind of dive in and get really, really clear on what your portfolio is going to do if any other asset class out there takes a big hit up or down. All right, so how does this work? Well, if you type this into your browser, simplertrading.com/2018, it'll take you to this page where you get to see this button that says Get the Bundle Today, and you'll see that you get the multi-squeeze indicator, which is $4.97 by itself, the top hat indicator, which is $4.97 by itself, the correlations tool, which is $3.97 by itself. So altogether, that's just under $1,400 plus live trading class with myself Wednesday from 1 to 3 Central, and if you can't attend it live, that's okay, it'll be recorded. So now it's, what is that, $1,700 almost. You can get all that for $7.97. And look, this stuff, in terms of tools producing an ROI on the money invested in the tools, this is one of the fastest we've seen, which is great. And I love it when people can kind of get their hands on some tools that get them into the natural rhythms of the market, so they're trading with the flow and not inadvertently trading against it just because they don't know how those big guys and institutions and computers are doing it. All right, so that's what I got. You guys have a fantastic evening, and looking forward to joining you with the live trading tomorrow if you're going to do that. Otherwise, see you at the next update.